Hey everyone, just gonna jump live and talk about Robinhood just for a little bit because they had their IPO yesterday. So just wanted to give you some high level thoughts. This isn't going to be a deep stock analysis. We're not going to get deep into the numbers or anything like that. So that we can do in another video. If you want to get deep into the numbers, you could comment below and we can look into everything we can find. But this is more just a high level overview of the stock and what I think its future can have, etc. So Robinhood, as you know, probably everyone on this video who's going to be watching this knows, kind of changed, democratized investing for all, basically, because they kind of were the first to do, I believe, free trading. And when I say free, obviously people like to criticize them for saying, oh, well, they make money from order flow, etc. But they made it so that the consumer, even if they're making some pennies on the back end, fractions of pennies on the back end, they made it so that the consumer can just buy a share and not have to pay. I used to pay on E-Trade $10 every time you had to buy a share or whatever. They made it so that everyone kind of had to follow their footsteps and you can buy shares without paying that fee. So, a couple things. First, I just want to go over that Robinhood has 18 million accounts, and this was as of July 1st, this was published or whatever. This was from the end of March of 2020, their last earnings. Since then, it's actually higher. I forget if he said it was like 21 or 22 million people when Vlad, the CEO, was on Mad Money with Jim Cramer. So they're constantly growing accounts, over 80 billion in assets, and growing obviously since then. The stock had a pretty crappy day, as we all know. So I'm just going to pull up the stock real quick. Sorry, this is not the stock. Where is it? Here. Robinhood. So on the first day it opened, it was down about 10%. And, it was down to like $33.41 at the low. Overall, because today we've had it, I think it's a little down. Yeah, so it's a little down. It was down earlier more, but it's come back up. But overall, it's down 6.36% from its IPO price till now. And they did actually put the IPO price on the bottom of the range because they were trying, I think, to get a bump in the price, which didn't really work. Unfortunately, so I know they were pricing it between 38 and I believe 42, and they chose 38 as the price. In my opinion, that was a mistake. They wanted to do it because they wanted to give it at a cheaper price for people, but the bottom line, and then obviously, hopefully, it goes up and it looks like, all right, the first day you have a good day. But by doing that, they missed out on capital they could have had on their balance sheet, because they could have sold it at $40 or $42. It dropped at 10%, on the first day. So who cares if it drops 10% or it drops 14%? At the end of the day, if you're a long-term Robinhood investor, you're going to want more cash in their balance sheet to keep their growth, etc. So I think they should have just raised more money. It was going to be a flop either way, and it turned out to be a flop, at least for the first day. So at this price, like at right now's price, $34, we're talking about a market cap of 28 billion, 29 billion. So it's under 30 billion market cap. A lot of people will say, oh, Robinhood's dead. Robinhood, after the GameStop thing, no one's going to use Robinhood. But the bottom line is the numbers show a different picture. The truth is, during the GameStop situation, Robinhood's daily active retail investors who were using it every day, buying or selling, just was skyrocketing up. And everyone I know who uses a Robinhood account still uses a Robinhood account. They'll complain about it, this or that, but they don't move. They still have a Robinhood account. And the new users, the acquisitions of users that Robinhood's getting, it's only been increasing. So I don't see it as Robinhood's dead. I actually think, if anything, all this press has just got more attention to Robinhood, and they seem to be growing constantly. They were number one on the App Store during all the crypto, crazy movements. They jumped up to number one, beating out Cash App, beating out a bunch of other apps, even like BlockFi and all these, Bitcoin-oriented apps, including Coinbase, etc. So this is Cash App's users. I just wanted to give you some comparison. I just want to show that there's a huge disruption going on in the fintech space. So one of the biggest changes coming, and I don't know if anyone watches ARK Invest and Kathy Wood, but a big thing she talks about is that there are a few basically categories in the world that are completely getting disrupted, and we're going to see these changes over years. And one of them is the financial system. So personally, I stay, even though a lot of banks have like really low price to earnings, you can get good cash flow, etc., good dividends. I stay away from banks because banks is one of those businesses that I believe over the next decade is going to be completely disrupted with these new fintech companies. So they're still in their early stages, but a couple of them are pretty big. So Cash App, owned by Square, in 2017 it had 7 million members. It doubled, to 15 million, 2019 to 24 million, 2020 to 36 million. So we're seeing these numbers increase like crazy, the amount of users. And think digital fintech kind of apps and companies like a Robinhood or a Cash App or a Venmo or whatever, they're not held down by saying, okay, we need physical branches. So the traditional way, when you think of PNCs or JP Morgan, Chase or Bank of America, they have actual banks, and you go to the bank, you open a business, you go to the bank, you meet an actual person, whatever, and you open your account. It's way more capital intensive, the old legacy way, and I kind of think of it in like similar to pretty much almost everything you can think that's been disrupted, like how Tesla handles cars versus legacy auto handles cars, where there's like a dealer and there's all these extra steps. You get your insurance from someone else, and like Tesla kind of just wants to make it a ecosystem where you'll get your insurance from them, you're buying the car direct from them, or think of streaming disruption where rather than the guy who makes the movie, Netflix makes a movie. And then they put it on their own platform and stream it directly to you, and you pay Netflix a flat fee, a monthly fee. Whereas before it was like you got the producer making a movie, you have a distributor, different guys might be distributing the movie. Then you got like different channels where you're paying for internet to, you're paying for your cable TV at your house to be able to watch it. Like basically, rather than just one source, it was multi sources, etc. And that's kind of like banking. A lot of, well, getting a little off topic, but with banking, a lot of the expense part, rather than like, it is still like you go to JP Morgan, it's just JP Morgan. But the expense part of being limited to physical locations is not nearly the same as like a digital presence where anyone in the world just opens their app and can basically get a mortgage or trade stocks or do this in such an easy and good user interface. Now, the thing is, of course, people will say banks and whatnot will be able to do everything that the digital banks, fintech players are doing, like a Cash App, because they have the services, they have everything, but they're not going to get rid of their expenses of their physical storefronts and things like that. And the biggest, even bigger issue than that is, I don't know if any of you have used bank apps and whatnot compared to fintech apps, but they just don't have the talent. Like the apps, the user interfaces are just not good. So basically, you're dealing with like user interfaces that are, they don't, there's only so much high-end software talent and AI talent and different things that are going to make one service better than the other for trying to get you the best, mortgage based on info you give them, or trying to figure out what insurance payments you should be making, or all different types of, verticals you can get into. But the bottom line is a business is just made up of talent. And when it comes to a software business rather than a physical business, it's really about the software talent you have. And when you're a good software engineer and you have a choice to work for a company like Robinhood or Square or Shopify versus working for a company like JP Morgan or Bank of America, you tend to go for the more, say cool businesses versus legacy businesses. So anyways, back to Robinhood. So the Cash App business basically has been growing like crazy. So Robinhood also growing like crazy. And we talked about like it just went down about 28.9 billion. I just want to give you guys a understanding of how big regular banks are, because I don't know if any of you guys trade regular banks or understand like what the market size is. But just for example, like think of like PNC. PNC is not disrupting anything. PNC is basically just a regular bank. I mean, I don't know if you guys have a PNC around you. It's just a regular PNC bank without much disruption. But because of how big the banking financial system is, it can have a $78 billion market cap and be trading for a cheap PE at $78 billion. Then think of like Bank of America, a bigger company. That one has $331 billion in market cap, with a P of just 12. Because, so they're fairly priced, banks, but the market caps are huge on these companies. JP Morgan, market cap of $463 billion. So it's the industry, the total addressable market, the TAM of these companies are humongous. So you basically have Robinhood being the newcomer to the financial industry in comparison to these legacy banks with a $28 billion market cap. And on a high level, without trying to dig deep into the numbers, because this is still like, Robinhood just offers it started with, it offered trading, then it got into options, then it got into margin, then it got into cryptocurrency, then it got into having a cash card. So now it has a physical card you can get. And they'll keep expanding what they do. Vlad's talked about it. They're going to keep putting more and more features that more and more takes over more and more of the banking industry. It's not just them going to do it. Cash App will do it. A bunch of people will do it. So I'm not saying that Robinhood's going to be the winner for sure. But what I liked is that most people who have a Robinhood account, their cash balance in their account is really small. And it's because they're young people. And we all know, anyone who has money at some point probably didn't have money, even if they were, they could have been left money. But the point is, you usually have less money, and over your life, you have more money. If we looked up the average amount of money that a 18-year-old has versus the average amount of money a 40-year-old has, there's a big difference. So with time and with compounding and with investing early, because that's what Robinhood is getting, younger people are investing early. So most young people never invested back in the day at such an early age. So my thought is that with compounding, with investing early, these people that are starting early are going to have a lot more money in their later years than the typical person today has in those years. And it is a very long game to get there. But once you get there, Robinhood has the potential, in my opinion, to be much bigger than a legacy bank. They're going to have the users. The users themselves will grow over time to have the money. And the users are going to want to stay on a platform that they're comfortable with and they've grown with. So, I have a lot of friends who, I have a Robinhood account, but I also have an E-Trade account, and I use other platforms as well. But I have a lot of friends who simply are like, look, Robinhood pissed me off with this or that. It didn't get my trade in right or whatever. And I'm like, so switch, go to E-Trade. And they just don't. They're like, yeah, but I like how it looks. I like the interface. So the bottom line is they are doing things right. And I do think they're going to keep their customers and keep growing their customers. So I like the stock. So, if you're wondering if I bought it or not, I just put it on the screen here. Let's see. So this is my position right here. I bought 5,000 shares, about $174,200 worth. I took the photo yesterday, so I don't know what it would be right now. I'd have to go on my account. But 5,000 shares at $34.72. So right now it's slightly under that, I believe. It's like $34.21. And my idea with it is it's not about the short term. I'm not holding these. I'm going to take this off. All right, so I'm not holding these shares for the next quarter, 2 quarters, 3 quarters, and because I don't think they're going to be making much money. It's this business is about growing, expanding their products, keeping their customers, not having churn, and if they continue to do that and they execute properly, then in 10 years from now or whatnot, think about it this way: even if it takes 10 years, even if it takes 20 years. Which, it's not like someone wants to wait 20 years or whatever, but even if it took that long to become the size of a Bank of America, well, you're going from under $30 billion to a $330 billion in that case, if they can create that market size. And I'm sure their margins and things will end up better because of the leverage they'll have by being digital. So there is a clear case for Robinhood, if with good execution over a long time horizon, they're in an industry where they can be a 10x from this price. And it's not like, it's just Bank of America. I mean, I showed you JP Morgan has $463 billion, and we could look up a bunch of banks. I mean, there are many, many banks that no one that I know have heard of that are trading at $100+ billion valuations. So the banking business is a massive market, plenty of room for disruption and plenty of room for companies that are in the, $1 to $50 billion range, that are these fintech companies, to continue to disrupt and go further. Now, Robinhood's not my only fintech play. I am holding plays. I bought into SoFi privately before it was a publicly traded company. So I do hold my SoFi still that I got. I do hold other, I have Square I actually participate in Square's IPO at $9 a share. There's a lot of fintech plays I'm holding, but I did want to point out and give my thoughts on Robinhood. So that's really what today was about, is just to show you, this live stream was just to show you what I think about Robinhood on a high level, not about what its numbers are this very moment, but what its industry is and what it's doing, and what, how it can become something much larger. So just checking out some of the comments. Thanks, Avishai. What field am I in? Let's see. So, well, I'm an investor. That's what I like to say. Now, I've been in multiple businesses. I own a lot of different retail businesses and real estate and whatnot. But I personally, I identify mostly as an investor. I invest in a lot of private companies, pre-IPO, private placements and whatnot. And I've been trading since I was like 13 years old. I'm 20. I'll be 28 in September. But this is what I do. I sit, I research, I analyze companies, and I invest in them, private and public. And then Wall Street. Let's see what else we wrote here. So, Robin. Sorry guys, this comment's just a little cut off on my screen. Here we go. Wall Street Bet users say they hate Robinhood, but every screenshot on them sub is from Robinhood. 100%. And that's exactly right. Everybody that I know that complains about Robinhood uses Robinhood. So, I like to forget about the noise and just see what's actually happening. And just like you said, they're all using Robinhood because they like to complain. So let them complain. But the bottom line is they're using the product. When they use the product, it's good for the company. So, I'm holding the shares. I'm definitely interested in what you guys think of the company. I know there's a lot of criticism. I might get hate for it, but on the comments. But personally, I don't think Robinhood did really anything wrong. I mean, I looked deep into what they were. I kind of looked deep into at the time when they stopped trading for GameStop. They didn't have an option. They just didn't have a choice. They had more people than other platforms, buying and selling GameStop and whatnot. And they got a call, and the call basically said, you need to have X amount of dollars to be able to, I forget how much it was billions of dollars. It was like $2 billion or $3 billion. You need to send that over right away, overnight, wire it or whatever, in order for us to allow you to keep having your users trade this. And they just didn't have that money, so they had to raise it instantly. So they were like, all right, we have to pause it, because it's one of two things. Either the entire platform goes out and no one can buy or sell anything because they're going to go bankrupt and destroyed, or we pause this. If you have it, we'll allow you to sell it, because people got upset that they were like, oh, why didn't you pause both buying and selling? Well, people could then sell on other platforms or whatnot, so you just put an extra disadvantage on Robinhood account users. They paused the bare minimum that they had to until they could get it back opening. It was the only option they had, and to just expect that a company that was still relatively small as far as cash balance and things like this would just have billions of dollars ready to be wired. It's just, it's not as logical. I mean, imagine getting a call like that, and just someone wants you to wire $2 billion overnight, and it's a once in a, I forget, what the odds were, but he said he called it some term that basically meant that this only happens once in 100 million chance. So it's being prepared for that is just, I think they got a little too much criticism. And I think they're doing everything they can to make sure that, it doesn't happen again. So it's sad to see when people, they really did come out saying, oh, we want to make everyone be able to trade and everyone be able to participate without these fees. And then that same company gets attacked like they're being the bad guy for things. They need to be able to, order flow and whatnot with all of that. They have to make money somewhere. So, that's it. What do you think about Robinhood account average size being 4,000? So I'm kind of touched on it a little bit earlier in this live stream. I don't know if you were on for that part or not, but basically I don't think it's a bad thing. So I think what it tells me is the average Robinhood account is held by a very young person. And that's not a bad thing, because it's better to get someone when they're young and keep them for the entirety of their life on your platform. A lot of people have said, there's plenty of studies that show it's cheaper to keep a customer than it is to acquire a new customer. So I rather have a young customer, an 18-year-old just opens his first account, doesn't have that much money, puts $500 in, and starts with Robinhood and spends his whole life, as he grows, gets salary from his job, keeps adding to his Robin account, keeps investing over the long run, and have him for many, many years. Then you get a guy who's 60 years old, and he puts $1 million in his account, in very safe stocks. He's not trading often. It's just there sitting. Of course, the $1 million is better at the very, in that moment than having someone with just $500. But over the lifetime of the 60-year-old man versus the 18-year-old person and what they'll put in, I like to be optimistic and believe that the 18-year-old will continue to grow his businesses in real life or his career, and will continue to add money, and basically Robinhood will, I think it's good for the customer, but I think as the company, Robinhood will benefit more from the younger customer's entire lifetime period than an older customer who's not going to do as much on the platform in a higher balance. So that's my kind of high level thought on the average price of a Robinhood account, but time will tell. So it'll be interesting to see, and if there's any other questions, happy to answer them. Otherwise, you can throw them in the comments. This is going to be uploaded onto YouTube, and I'll answer them then for sure. Appreciate everyone who jumps on live with me. I still have a few videos. We're just doing some finishing touches on them before I upload those ones up. If there's any other videos you guys want or stocks you want me to talk about, drop it in the comments. Happy to do that. Don't forget to like this video. It really helps the YouTube algorithm. Really appreciate that. And subscribe if you haven't. And